All right, let's take a look at an earnings breakdown. What we're going to do is we're going to take a look at NIO. This one's pretty popular these days, so we're going to take a look at it and see what's happening here in the charts. Now, normally I will say be careful with earnings. And if you do look to as a long-term investing with earnings or with a certain stock, hold it for multiple earnings cycles, and that will give you kind of a nice average point with earnings. Sometimes you'll win some, sometimes you'll lose some. So in either case, as we look to this company, here's NIO. I'll pull it up for you. So we have the earnings report right here. And when we take a look at what went on with the chart, we kind of had a gap down and then a revival to some degree, kind of like either that or the shorts taking some profits. Now, one thing I will point out, if we look at just today's movers and shakers, NIO, one that's down, a lot of other parts in the market were up. So if we look at NIO here, we're actually down, whereas Tesla's up 18, Ford, GM and Workhorse Group. So there's a handful there. And if we just look at just even on the Tesla side and we pull up a lot of the tickers. So if we look at all of these, there's just so many stocks that were powering, whereas NIO not doing so well. So that's kind of a little bit of the issue. Looking at this, here is the, some of the headlines here from NIO. So ultimately the stock, is it really a buy at 11? I'm going to show you kind of my thought on the charts. So there was a ton of news here post earnings reports, and people are trying to dissect this, and they're trying to wonder, hey, should I get in it now? Should I get in it now? And really the stock, it missed on the earnings, but what can you do? What we're looking at is here. I want to show you the concept of these charts and what it kind of could mean for the stock. Now, normally what you want to do is watch kind of the volume. And when you watch the volume, that'll give you a little bit of an indication where the money flow is going. Now, unfortunately, this is kind of just right now, 8/29 is the earnings report. So this is what we've got is this earnings right there. And this one right here, you want to be a little bit more mindful and be a little more careful with this. So since we just had that earnings report, this can be a little bit troublesome to read and dissect. Now, normally I would say this volume looked pretty good. It looked very bullish in this case. So that was, hey, good thing, looked good, and doing a good job. Unfortunately, we've got now some selling pressure. Now that volume is actually smaller than the volume that was on the buy side. So that also, in theory, was good. However, here's the problem. Now this consolidation that's happening and this consolidation that we've got going on right here, this volume is weaker, and that's a little bit of a problem. And the same thing here on this down move here, we had a big flush down that penetrated or broke through this support level or this region. Because if you look at the support level, you've got a couple of points, but really one of the key points here is this one. And that you can say kind of extends to these points, not exactly or not perfectly, but you're hitting some of these few spots and that broke through. Now, long-term trend, you're still kind of holding this rounding zone and you still got this big volume right there, but this could be a little bit of an issue and problem where you could have that stock come back and test. The other issue that I kind of want to point out, again, not trying to point out all the issues, I'm just trying to get you aware of the risk, is here you could look at it as an A to B, B to C, C to D pattern where the stock could start to come back, creating an A, B, C, D pattern. So that's what I want to be mindful of. It is the first kind of day post earnings, so that is a bit of a concern. Give it usually 2-3 days. By the second and third day, you'll start to see where the momentum is heading. By the fifth day is where I say usually third, fourth, fifth day is where it's a little more tradable without a lot of people, because right now what's happening is people are coming back from work and now they're going to digest what's happened, and then they might be dumping some shares the second day or the third day. So you got to remember, not everybody's checking that market every day. So that could play a little bit of a role. So that's what I wanted to share with you is on this one, just some things to watch out for is that you could actually be building a sideways base here. And then as it broke it here, that could have some follow through. So that's a bit of a concern because you also have some light volume here on that sideways consolidation. Anyway, overall though, trend is still, moving average wise, it's still kind of going now in this direction. If we look at the monthly though, that's a little bit of a concern. That's where that 717 price tag or around that area is. It's also kind of near that IPO range or price in that zone too. So even though it's kind of one of those popular stocks, I would be a little bit more cautious here a little bit more concern simply because of what happened a little more today, because that could throw a little bit of a monkey wrench to it. So anyway, hope that helps, gives you a little insight. Truly appreciate you sticking with me. Check out our other website, tradersfly.com, if you want to learn to trade options and much more. And feel free to subscribe to the channel if you're brand new, and I will see you in the next video update. Thanks.